almost 6.5% till date. So that's significant. So
Right.
those who were expecting, yeah.
Right, that's significant. But before we go any further, we were talking about sectors and stocks. If you take a look at the list of top gainers, today, Amar, and you take a look at the top gainers yesterday, that list is a repeat. Infosys, HCL Tech, Wipro, all top gainers. The IT pack over 4%. Similar kind of gains yesterday. Quite a run it's been for the IT pack, especially over the last two trading sessions.
Yeah, that's correct. And also, if you look at the global markets, the Nasdaq is up almost 41% a year till date. So that tells us how the IT stocks and IT companies are behaving not only in India but across the world. So that's one trigger. And also, IT is expected to perform better. And if you look at the Nifty IT, because that's a benchmark index, we've seen it consolidate and then breach the levels of 33,400, 500 levels. Currently it's around 35,800 levels, but still it is a far cry from its all-time highs. So the all-time high of Nifty IT was somewhere around 38,000 odd levels, so 38,800 levels. So it's still a far cry from there. And now it appears that with these heavyweight IT stocks really taking off, there would be more momentum there to stay. And we could see some further sharp up move here in the IT space.
Sharp up move in the IT space, Amar. But talk to us in terms of what does this rally mean as we get into a brand new year. Just a couple of months ago, there was talk of how Indian markets may be overheated on the back of the already months and months of rallies before that. But it's I keep asking this to every market expert. We seem to be in a Goldilocks scenario, and we keep going up further and further. If I were to ask you at this stage, what are the levels that you see Sensex and Nifty hitting going forward? What would be your take?
I would say whatever levels we talk about, we see that that's getting breached very easily. Yeah, but having said that, I would say a couple of things that we definitely need to pay attention to. One is, I'll come to the levels, but first I'd like to talk about, which you also mentioned briefly, is India VIX.
All right.
So
All right.
that's something, yeah, that's something one definitely needs to keep a watch out where it is, because trading is around 13 right now. So 13, 14, 15 range is okay. That's not much of a concern. But if it starts moving and sustaining above that level, that means now the markets are getting somewhat unnerved by this sharp rally. So that is one data point which everyone should keep a watch on. As far as levels are concerned, I would say Nifty has now got very strong support, short-term support coming on the 21,200 odd levels, 200, 250 zone. That's a zone of support. On the upside, resistance is around 21,000, 575, 600. That's a zone of immediate resistance for Nifty. As far as the markets and the trend is concerned, very strongly bullish. The data points, derivative data is also strongly in favor of the bulls. And what has happened is that the shorts didn't anticipate such a sharp rally. So the shorts got squeezed. So the move which we are witnessing, that's also because a lot of shorts are getting covered. So that also is definitely helping the markets and helping the bulls.
All right, fair enough. That's as far as the broader markets, Nifty and Sensex are concerned. Let's take a look at the sectors that are the gaining and losing sectors for the day. IT clearly an outperformer when it comes to the top sectors for the day, up 4.5%. Apart from that, if you were to take a look at the other big gaining sectors, the realty pack up 3.88%. Again, Amar, if you take a look at the top gaining and losing sectors after yesterday's trading session and Thursday's trading session, the top two were exactly the same: Nifty and the Nifty IT and the Nifty Realty pack. So tell us, we discussed the IT pack. Your thoughts on the Realty pack?
I would say real estate has also been doing very well because a couple of things. One is that we see that the economy doing well. We also see a lot of offtake happening in the luxury segment, because earlier what happened was when these real estate companies got a hit, that was primarily because they had majorly focused on the luxury segment and they had completely ignored the middle segment, the mid-income segment. So now now the real estate companies are having a mix of all these. So they are focusing on mid-income as well as luxury. And now the luxury, I would say, real estate has also taken off across the country. So that also has helped. And we look at the likes of DLF. DLF is still a far cry from its all-time highs, which was around 1,200 levels. Currently, it's around 705. But the momentum is very strong on these long-term charts. So that tells me that corrections should be used as buying opportunities rather than going short. One should not short a market which is trending very strongly until unless we see some signs of consolidation or some bearish divergence on the charts.
Right, that's Amar's take on the realty pack. Huge gains on both the IT and the realty pack. Top gainers. If you can pull up that chart for the day, top gainers today, ladies and gentlemen, it's a repeat performance as we've been talking about. HCL Tech up 5.5%, TCS up 5.5%, Infosys up 5%. There you go. But we have a couple of other ones in today's top gainers. We have SBI up nearly 4% and Tata Steel up 3.5%. Aamar, your thoughts on these two stocks?
Yeah, I would say SBI is very strong on the short-term charts. Medium term, we are seeing that the stock was in for some consolidation. It was unable to breach the 625, 630 levels. Going back in time, what we see is that somewhere the stock had resistance around the 630 level. So that has been taken out and the stock is currently on 650 odd levels. So that tells me that the stock needs to sustain above the 625, 630 from a short-term perspective. Because the long-term charts of SBI, I'm talking about the monthly chart, that shows some sort of consolidation. So for any major breakout, the stock now needs to sustain above the 620, 630 zone. That's going to be very important. And the other stock which you mentioned, Tata Steel, if I look at Tata Steel, it has given a breakout from a major zone of resistance. So somewhere around 125, 130, that was earlier acting as a zone of resistance, the stock has taken out and the stock is trading above those levels. So sustaining above the 125, 135 zone, the stock has a potential to rally towards 150 odd levels. So, but it needs to sustain above the 130, 135 zone.
Right. So that's the story as far as the top gainers are concerned. I'm going to bring this back to the other focus that we always have here, not just about the stocks, also about the big picture, the macro picture. Look at the way Indian markets are. When you see what's happening in the global markets, Aamar, look at what's happening in Wall Street, for example. Wall Street scaling fresh 2023-year highs on a daily basis these days. And if you were to take a look at how Asian markets closed for trading today, Hang Seng up nearly 2.5% in the green. Shanghai Composite down 0.5%. But Japan's Nikkei up nearly 1%, and South Korea's Kospi too up nearly 1% in the green. It's clear that Indian markets have learned to decouple themselves from all global markets, and not just Wall Street, not just the Asian markets, just all markets across the board. But how do you read the way global markets have been trading over the course of this week?
I would say a couple of factors which have really triggered this. One is that inflationary concerns to a certain extent have tapered off. Also, we look at the energy prices. So that's also on the downside. We've seen some significant correction in the crude oil prices. So that also is definitely helping. And also the fears of further rate hikes, that has completely receded. So now means investors are talking about rate cuts, and that Fed has also accepted that there's likely to be rate cuts. But
right. Aamar, the other question I have to ask at this stage is that how do you pace yourself in a bull market that seems to have no finite end in sight, and you are getting into a year in which, yes, we always talk about the fact that it's big election year for India, 2024. But clearly, it's not just for India. Literally every country, every major economy in the world is going for elections in 2024. You have US, UK, Russia, and a bunch of other countries like South Korea going for the parliamentary elections. It's a chock-a-block election year, 2024. So does that mean there is greater chances of volatility in global markets? And again, Indian markets will continue to be Teflon coated, considering what happened with the so-called semi-finals of the state elections.
Yeah, you rightly said that next year is definitely going to be very interesting. India, the first half, US, the second half. And if you look at the US, first I'll talk about the US. So if you look at the US, the Democrats stand a better chance if the US economy does better. So they would keep or they would try everything under their, I would say, wherewithal to ensure that the US economy continues to do well, because it's a very, very close fight with the Democrats versus the Republicans, which is unlike the case in India. where we see, as you rightly said, the semi-finals, the state elections clearly showed that where the results would likely end in the Lok Sabha elections. So investors are having that level of comfort, which is there in India. So that gives India an advantage. Also, with the FII also coming into, and consistently we are seeing that they are pumping in money. So if that sustains, that's positive. But I would say majorly we have to look at what exactly happens in the US. So Democrats would make all attempts to ensure that the economy continues to remain positive, and for that the stock markets would have to do good.
But you know, America always has that Trump card playing all the time, so we'll have to see how far that goes. The reason why I'm asking you is that I'm asking you purely from a retail investor's perspective. You know, all the audience watching this broadcast, tell them, you know, your themes that, according to you, the themes that they should be looking for and how they should be going about investing in a market like this. I'm asking this, Aamar, because everybody wants to know which IPO that they should be going for. And everybody's going for every single IPO, and nobody's getting enough allotment in return.
Yeah, that definitely is the case, always the case. If we go back in time and look at all the bull markets which are there and the IPOs, you correlate the IPO number of IPOs with the bull markets. So you will find that the number of IPOs quadruple during a bull market, and also valuations also get stretched. So you have to be careful while investing in IPOs, never get carried away. There's always another day. And if you look at the markets from a long-term perspective, you can always invest in the market any day, but provided you get into an SIP mode. So if you look at stock portfolio, then you should have at least 10 to 12 stocks. And from a long-term perspective, you should look at an SIP mode. If you don't want to get in stocks, then mutual funds or ETFs are a good way of looking at the markets. They also generate good returns, but you have to evaluate the performance definitely in a couple of years from a long-term perspective. But you definitely, at the current levels, making fresh entry or committing large amount of capital, you need to be careful.
All right. So which essentially means SIP sahi hai in a market like this. If you need to go or in fact or invest in smaller amounts over a period of time, is the word coming in from Aamar. Aamar, thank you so much for taking time out to be with us here. Aamar Singh, the Senior Vice President Research at Angel One Limited. And with that, we wrap up this particular edition of our First Take. We are taking a short breather, but take a look at this. Climate change is a global challenge that transcends national borders, and in the light of the persistent worries about climate change and a sustainable world, India has steadfastly committed to achieving both its long-term and short-term emission targets by the year 2070.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There's certainly a wall of capital coming into the clean tech, climate tech space, not just in India but across the world.
This and more, streaming on world's first news OTT,